Testing 1 2 1 2 1 2. Let me know if you guys can hear me. Let me know if you can hear me. Let's go. Sheesh. What's going on, ladies and gentlemen? Welcome, welcome, welcome to the Lux Academy. I am super, super excited to have you guys here today. We are super, super excited. Man, wow, wow. Thank you all for tuning in. Do I have an amazing show for you today? Wow. It's been it's been a busy morning, but hey, this is what we're here for. Okay. This is why we did this, ladies and gentlemen. And I just want to let you know that first of all, I want to thank you all for your support of subscribing to the Lux Academy. Okay. And yeah, we're about to change the game. Let's go. All right, let me just find my want to find my okay, there we go. Lux charts. Let me go ahead and sign in real quick. There we go. And my Lux Live. Ooh, your calendar. Did the calendar disappear? Did the calendar disappear? Can everybody get on? Refresh your page. Oh yeah, the link did disappear. The link did disappear. It's okay. I got you. I got you. The link it did disappear. Um so so what I'm going to do is let me go ahead and add the link back over here real quick because I think the link did disappear. I got you. I got you. Yeah. I think I may have set the time for yeah, I should have kept it for like 3 hours. But once it's live, the link disappears. All right. So I'm going to put it back over here and we're going to get this thing started. Can somebody share the link? Maybe y'all can share the link inside of the group, inside of the, hold on. Yeah. Maybe you can share the link because it should direct you to the YouTube. All right. Live. Yeah. Perfect. It's not showing that I'm live over here, but um, end of week. Perfect. All right. Thank you. Thank you. Thank you. Thank you. Thank you for sharing that. Thank you. Thank you for Perfect. Yes. 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 All right. So if anybody else, I'm going to have to fix this later, but I just don't want to mess up the call today. But yes, ladies and gentlemen, it disappeared when the class started. So on this call today, all right, just remind you, you're going to be able to go back and watch the lessons, and we're going to put everything into an order. So eventually, you'll go back and watch it. Okay. So with that being said, just put this over here just in case. There we go. Share to my WhatsApp. There we go. Perfect. All right. So on this call today, ladies and gentlemen, we are going to be talking about the trend. Okay. Number one, you want to identify the trend before you actually execute any trades. Okay. Identifying the trend before you start executing any trades. And that's one of the biggest issues that I noticed even when I first got started. I used to just get into the trade and say to myself, oh, let me just get in. The market is moving. And I realized I was getting in, I was getting in a trade in the wrong direction. The trend was ending. And before you know it, I ended up blowing my account. So, what we're going to talk about is how to identify the trend before we enter the trade. And understanding that also will help you the direction to enter in. Okay. So let's type in resend the PDF for today's class. Okay. There we go. All right. So let's go over here to a blank screen. Wow. I am so excited now. All right. Let's go over here to a blank screen. And what I want to do is, as you can see here, we're looking at NAS 100 on the 4-hour time frame. And you can clearly see that the market is making new highs. Okay. We have a high here. We have a high here. And as the market is making highs, we can easily see. You said maximize my screen. Okay. Yes. Perfect. All right. Is that better? All right. That should be better, right? Perfect. Yes. It's good now, right? Perfect. 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 Good stuff. Good stuff. All right. All right. All right. That's what I'm talking about. All right. So now we can see that the market is making highs. We get a little pullback here and then we make a new high. But you're wondering, how do I enter the trade? What should I be looking for to enter this trade? All right. And there we go. In order to know the direction of the trend, we first have to see that the market is making, let's say in an uptrend, making higher highs and higher lows. So this is what it would look like. Okay. So on our screen, we draw the market rising up. The market is making a high. The market pulls back and make a higher low. Okay. Now, the next thing that happens is the market creates a new high, higher high. Now, every new high is going to be followed by a break of structure. Okay. BOS is going to be our break of structure. And I'll just put here, make sure if you're taking notes, make sure to write out the same exact thing that I'm drawing. Doesn't matter if you've been doing this and you already understand the trend. Already understand it, but don't worry. I got something good for you before this call is over. Okay. So we got the breaker structure. We had the higher high. Okay. And then we have a higher low. Now, the market is going to do the same thing over and over and over until there's a change of direction. Okay. So now let's go ahead and repeat this a few times. Higher high, higher low, higher high, higher low. Now, we know that the direction of this trend is up. Ladies and gentlemen, when it comes to uh, a trend, all you need is 2 points of contact. Now, watch this. This is very important. So, if I was going to draw a trend line right now and I started from here, I just need 2 points of contact, meaning that contact number 1 would be right in this area. Contact number 1 would be right here. Contact number 2 would be at this area, the higher low. So when drawing my trend, I just need 2 points of contact, 1 and 2. Okay. Meaning that this is the starting point of the trend. Okay. Starting point of the trend. This is my pullback. And this area here, as long as the market creates a new high, now we have a trend. As long as the market creates a new high, now we have a trend. Because how many times have you said to yourself, all right, I don't know if the market is in an uptrend or a downtrend? You can see it rising up. You can clearly see that the market is in an uptrend, but by the time you see it, what happens? The market is usually reversing, right? So now this is starting point number 1. And this area here is going to be starting point number 2. Okay. This is my starting point number 2, right in this area right here. As long as the market creates a new high, we have a trend. Now, once that market creates a new high, what is the next direction? Where's the next area we're going to start drawing our trend? Okay, because this high may be a steep high right here. Maybe something happened and the market went higher. But when you look at this point, it doesn't come down to this trend line. It may stop right here. Okay, it may stop right in that area. Let's go ahead and draw this all over again. You've seen it before. The market make a strong impulse move, but the pullback does not come all the way down to this trend line. But instead, after making that strong impulse move, the market pulls back and stops around this area here. And then guess what? It goes higher all over again. And you're asking yourself, oh man, but what happened? But what about this trend line here? Well, ladies and gentlemen, if this is your first time seeing it, you saw this market here last week. And now this week you come in and the market didn't come all the way back down to the zone. Your next starting point is right here. Starting point number 2 to right here all over again. It's like a reset. Okay. So this is going to be your new trend line. As long as the market does what? Creates a new high, it's creating a trend. Okay. So we have starting point number 1 right here. And starting point number 2 is going to be over here again. It's just going to restart over and over and over. Okay. Over and over and over. So now, here's the cool part about this. Sometimes you might look at this and say, okay, I got it. It's starting to make sense now. The market went higher. But all right, it's doing the same thing again. It pulled back, but did not touch the trend line, and it went higher again. Perfect. It's all about repetition, doing the same thing over and over until you understand it. Okay. Starting point number 2 right here turns into starting point number 1. Have you ever drawn a trend line and you noticed, you said to yourself, hold on, that trend line, it's starting to disappear. It's starting to fade out. Okay. So now, starting point number 1, starting point number 2, the market went higher. Starting point number 1, starting point number 2, the market went higher. And all we're going to do is just keep repeating this step. We need to follow the trend. This is following the trend. Okay. Does that make sense, ladies and gentlemen? Following the trend. Because imagine if you would have just left this trend line here and the market would have went out into the future. Notice the market is nowhere near this trend line here. Okay. It's nowhere near that trend line. And you're waiting for the market to come back down to the zone to bounce off of this level. And you got a pending order sitting here and saying, oh, got a buy limit. I know this is the area of structure. This is my demand zone. This is my starting point. I know the buyers are going to come back to this level. But how many times have you seen on your charts that the market has never came back to that zone? It's been a long time. The market, you're saying to yourself, whoa, why isn't the market coming back to this level? What's taking it so long? You're now on a 4-hour time frame and you see that the market is going higher and higher and higher. You see pullbacks happening a lot, but it failed to come back to the zone. It's because we're not following the trend. Look, we see it. We see the trend, but we're not physically following it. Okay? Following it by drawing these trend lines. How many times have you used, some of you who may use EMAs, indicators? You may have a 50-period moving average, a 100-period moving average on your chart. And as you notice, having that moving average on your chart, it may look like this, down in this zone, way down here. And this is how most people will be able to determine the trend, because they're saying, oh, As long as we're above this 200 period moving average, we are in an uptrend. Am I right or wrong, ladies and gentlemen? Go ahead and drop that 215 in the chat box. Okay. All right. You're looking at moving averages, but here's the thing. In order to get the moving average or whatever indicator you want to come close to the market, we have to change the settings. So you go from a 200 period moving average to maybe a 10 period moving average. And this starts to hug the charts. Okay. It starts to hug the charts, the candles, like it's cuddle season. But here's what happens, ladies and gentlemen. This is your outer trend line. When the market starts to get away from the trend, this becomes my outer trend. Okay. Higher time frame direction. Okay. This is my outer trend, my higher time frame direction. What does that mean? Oops. What did I just do? Okay. That means that when we're looking at this trend over here, the trend line is so far gone, we're expecting, okay? Notice, look how the trend line is just going away. And we look at the market and we say, okay, all right, how do I play this? Am I going to wait for the market to come down to the zone and reject? Well, look at this area here. Okay. The market isn't going to keep rising up forever. Okay. It isn't going to keep rising up forever. So you may see something like this happens. Okay. Just because you get that change of direction here. Okay. Just because you get that change of direction closing below the most recent trend line. Okay. Closing below the most recent trend line, that doesn't mean that the market is now in a downtrend. It just means that we're having a deeper retracement or pullback, because the higher 10 trend line direction right here, well, we still need to break. This is the start of the move. Before, that market was in a downtrend. Okay. It was in a downtrend. This is the start trend line that started pushing the market up. So in order for us to say we are now back in a downtrend, we need to close below all of this. Does that make sense? We need to close below all of this, ladies and gentlemen, before we can now say, oh, we're in a downtrend. But if that market pulls back just like this, and it just broke the trend line right here, before you enter that trade, you have to ask yourself, where is the nearest support level? Where's the nearest starting point? Where is the nearest demand zone? Where is the nearest order block? And I'm using all of those terms because they're all in the same area. Okay? Whether it's the order block, whether it's the demand zone, the starting point, it's all in the same area. So ask yourself this question. Once I find the next starting point, do I have enough space? Do I have enough pippage, okay, to enter this trade down to the next zone? If the answer is yes, take the trade. This next zone is going to be your take profit. It should take profit until the market tells you otherwise. Until the market tells you, hey, you can look for that continuation now. We're going to break structure now. But until then, I want you to treat it just as so. The market drops, pulls back, rejects. I'm looking for that rejection, change of direction. And now what are we doing? continuing the trend. You've seen this before. Okay. Don't get confused by when the market pulls back and breaks structure. That's right. Don't get confused, because when that market breaks structure, they may give you a right shoulder right here. Angie, how many times have we seen it before? You got that right shoulder. They reacted off of it, gave you a small opportunity right around the zone, and then eventually did what? Violate. Once they violated this area, boom, we continue the trend. Okay? We continue to the trend. So we just spoke about identifying the trend right now. Okay? We just spoke about identifying the trend. We also spoke about using the EMAs for those who use EMAs, whether it's the 50-period moving average or the 200 to confirm the trend direction. Okay? So when we go over to the live chart, there's ways that you can use just to assist you and help you identify that. So I can use a trend line, which is my favorite. Now you can use the manual trend line, or you can use the automatic trend line. The manual trend line, what you want to do is you want to find the turning point. Okay. Where is the turning point of the trend? So I'm looking at this area. I know that the market is here. I could draw from here to here. Isn't this a low? And this is a low right here. Those are two lows, right? So when we look at that as two lows and drawing our trends, let me bring the chart back. This would be point number one. Remember, we look for 2 points of contact. Point number one and point number two. After point number one and point number two, did we create a new high? Okay. As you can see, we did create a new high. So at least you have your points of contact. Yes, you do have a double bottom, but it doesn't always have to be a double bottom. Okay. Doesn't always have to be a double bottom. That's just, an area that you can identify as well. Okay. But this is not the start of the uptrend. We need to see the market coming from a downtrend to show us the starting point of the entire move. So as I'm looking for this, where is the starting point of the uptrend, the original starting point? All of this is showing me uptrend, uptrend, uptrend. So as I'm moving the market, uptrend, uptrend, uptrend. Oh, I think we found it. Ladies and gentlemen, what was the market doing prior to creating this massive 4-hour run? It was dropping down. So now that I understood and I've identified it, I need to find my 2 points of contact. One, market rise up, market pulls back, market goes higher. Okay, perfect. 2 points of contact. The second point of contact needs to push the market higher. Does that make sense? The second point of contact needs to break structure, creating a higher high. Okay, good stuff. So now when I grab my trend line, I can either do a manual trend line right here, 1 point to the second point, just like that. I'm not looking to force it. Do not force it. Okay. All right. There we go. Do not force it in trying to push it into the level. That's right. 2 points of contact needs to push the market higher. Do not go like this. If the market failed to come lower, remember what we were talking about? How after the market pushes higher, it comes back and it does not come all the way down to the trend line. Do not go like this. You're going to confuse yourself later on. You can either do the manual or you can use the other trend line, which is the ray. how to use the ray. What we're going to do is we're going to extend it out just like this. And then you bring it up, bring it up, bring it up. And the first point that you touch, that's the one that you're going to use. And right about there, okay? There it is. That's how you use your trend lines. So now notice how the market fails to come back and touch this zone. So what are we going to do next? Act like none of this happened. None of this happened. Now you're going to start to see, oh, I see what's happening now. Okay. So the next move, we're going to go from this point of contact. Did we make a new high? After this point of contact right here, did we make a new high? If we go from here to here, did we make a new high? Yes, you got to include the wicks. Okay. Look, here it is. If we connect this point with this point right here, did the market create a new high? No, it didn't. Okay. It did not create a new high. All right. So now when you look at that and you go just like that, like, oh man, you might look at this and say, okay, that didn't create a new high there, but what about here? Okay. What about in this range? Let me just put this over here. Right there. It did create a new area above here, but look what happened next. Because the market did not create a new high, they failed. Now you're thinking, oh man, should I be looking for a sell opportunity? Why we should not be looking for a sell, even though the market broke structure and came back down to this level. Even though the market went lower, the reason why we should not be looking for a sell position is because it did not break the outer trend line, the uptrend. This is the uptrend. The market did not break it. Okay. It did not close below. Good job. This right here is going to help you understand why you should not just be jumping into a trade for a sell, even if the market did not break the trend. This is the whole purpose. The name trend line is there for a reason. It did not break the original trend. Good job. Okay. Did not break the original trend. Perfect. So now, as the market went higher, okay, so now we're looking at this and we're saying to ourselves, all right, we're finally getting some structure breaks. Okay. We're finally breaking structure now. Now, there is opportunity in this area where you could have gotten to the trade. And it was this red box right here. Okay. Once that market came back down and you start to see it close above, now you can react onto this zone here and start looking for buys. Okay. So now let's go ahead and draw our other. I'll go from here to here now. Okay. Leave the outer trend there. It's going to come in handy. So I'll go from here to here. Do not change. Do not push it into the body. Always use the wick. Okay. So the market comes back and bounce off this level. The reason why I'm using this right here, because just like we said before, it needs to create. All right. So around this zone, we have a breaker structure here. We'll talk about that in the next lesson. Okay. Broke structure, creating, some highs inside of here. Okay. Creating some highs. So I connected to this one here. Once we did that, I was able to extend my trend. Okay. Now, here's the cool part. If I was to take this zone and connect it with this one here, notice the market is moving higher. And I take this level and I go from this trend line and I connect it here now. Now I'm going to push this all the way through because I'm going to extend it. Don't worry about it breaking here because none of this happened. So now watch this. This is where the money comes in at. That market bounced off the trend line and went higher and went higher and went higher. Notice right in this area, and I'm just showing you price action right now. We're not even using our tools. Notice what happened. After the market went high, there's my high. Now we're closing below the trend line. There's that strong dip below, and then we get the change of direction. Okay. It broke the trend. That's right. It broke the trend, but it's not a break of trend. This is the current trend. Okay. It didn't break this low down here, which is our starting point. It broke the trend, but then it came right back above this range right here. This is one of my favorite moves. What do we see when we speak about the first phase? You know that phase that we talk about? Okay. What is that first phase? That first phase is that consolidation. Okay. It's that consolidation phase. There's that consolidation. There's that low. And then we get the change of direction to the upside. The trend line let you know, hey, yes, we broke the trend, but then we came right back up. Okay. So now I'm going to grab this zone. This is how you manage your positions. Okay. So now I'm going to grab this trend. You could actually get this one out the way since, I don't want you having a whole bunch of trend lines on your chart. Start to look like the matrix. So now we got to go from this zone to this zone. This is how you follow the trend. Okay, just like that. So here we are, bouncing, bouncing. Notice what the market is doing. It's bouncing off the trend. Okay, we are creating new highs. This one was created by a gap that happened in the market. And you're going to eventually, once you get to the top, eventually you're going to see what's happening. Okay, eventually the market is going to come back and react to those zones. So what I like to do is, let's go ahead and we know that this is a high, nice resistance high right here. And just go ahead and extend that over, because when the time is right, you want to have your zones already there. So now I don't want to show you what's happening in the current. I'm just going to bring this down. Okay. So now the market is doing what? Making new highs. Okay. Break a structure right there along with a starting point right here. It's a beautiful starting point. Now, what happened? Break right here, create my trend. Right? I'm just following it. Starting point and connect it from the low to the next point right there. 1, 2. Does this make sense, ladies and gentlemen? 1, 2, right there. Just keep following it. This is your trade. This is what you're going to be trading every single day. Okay. 1, 2. Did we break the second one? Yes, we did. Okay. Perfect. Did we go higher? Yes, we did. So this starting point right here is going to be the starting point of my new trend. Boom, right there. So now we broke the starting point. Oh, okay. So we broke the starting point right there. Here's my high around this level. Okay. That's my high around that level. We broke the starting point. Now, notice the market comes back to the starting point. Now, I want you to see what's happening. This is how you can enter these trades now. You see this red trend line? See that red trend line? Did we break it? Did we break that red trend line? Yes, we did. Okay. But did we break the starting point? No, we didn't. Okay. We didn't break the starting point. Now, with that red trend line, we got a zone right there. It looks like we're closing back above that trend line. Let's see. Closing back above that trend line. Yes, we did. We close back above. Anytime the market gives you a play like this, that's your move. Low, high, lower low. Notice how we bounced off of this trend line. Change of direction back above the red trend line. Retest. And now take your play. There it is. Notice how we are hanging around this red zone right here, this red trend line. If you mark up your zones correct, what's going to happen is you're going to start to follow the trend. Okay? If you mark your zones correct, you'll follow the trend. And when you're looking at when a trend is broken, it's going to do one or two things. It's going to create, okay? When a trend is broken, it's going to create an inverted or a regular head and shoulder. Always remember that. When a trend is broken, it's going to create the fake out. Okay? So now, where's the white trend line? There it is. We just came back again. Now, just don't jump in the trade. You still got to follow structure. Structure is right here, that purple zone. Just because we're breaking it, follow structure. Follow structure. Oh, they playing games below the trend. Look how it's following the trend. Following the trend. Following the trend line. All right. Now, also got to make sure, did we create a new high yet? Still did not create a new high. Okay. Did not create a new high. Finally, broke structure once again. And look at this yellow trend line here. What are we doing? Bouncing off the yellow trend line. Okay. These trend lines up here, we out of those zones. Okay. We out of those zones for right now. Okay. Now let's see what happened. We bounced off the yellow. Before we got to the yellow, what happened? Here we go again. Break, high, low, lower low, change of direction. Okay. Do we have, which we're going to talk about in the next lesson, okay, the red zone right there. We got a red zone, a red box. So I'll just put this right here because we're not going to talk about that. This is a starting point in that zone. Bounced off the trend line, and look at where the current market is on NAS 100. Okay. We're following the trend. Okay. Now imagine if you didn't have a trend line. Okay. If it did not have a trend line here, what are we trading? We're trading blind. Think about that for a second. We are trading blind. Okay. Perfect. There we go. Okay. Hey, we are Stevie Wondering. That's right. So now when we look at this on NAS, can we expect NAS to come back and react off of this level? Can we expect NAS to come back and possibly react off of this level? What do we have here? Don't we have a trend line here? If they break the trend and structure, guess what? We got another conversation. If they break the trend and structure, we got another conversation. Good job. Okay. Let's take a look at another pair real quick. Perfect. Let's take a look at the dollar because there's a lot of stuff going on, especially in the market right now in the news. So we're going to take a look at the dollar and what's the direction of the trend based off of when the reversal happened. You always want to ask yourself to identify the direction of the trend. I can't just say, oh yeah, it's a downtrend, but where's the reversal? Plant this right in the middle as far as you can go. Okay. Because what we want to see at the highest point, we need to see on the left-hand side of the highest point that we were in an uptrend. Does that make sense? You see how you split it in half from the uptrend to the downtrend? So now I'll find my starting points. Okay. Here's my high right there and my next point. I could have went here. Notice, in order for the market to keep going in a downtrend, we need to see a trend line break and then come back. You'll see it in a second, okay? So there was a reason why I did not use this one here, because this one would not have showed up if we were just looking at this spot here. So first thing first, grab my high down to my low. There it is right there. Point one, point two. Okay. Now, I know that this area here is structure right around this area. Okay. And we got a nice little zone right there. But here's the cool part. Notice we have a nice little drop, pullback, drop, did not break the low, but now we broke the trend line. After breaking the trend line, check this out. Boom, we came right back down in the trend line. Whoa, what happened? While you back down inside that zone, what happened? You see, when the market breaks the trend in a downtrend, it creates the regular head and shoulder pattern. The regular head and shoulder pattern, ladies and gentlemen, does what? It shows us that the market is selling in a downtrend. So always remember, in a downtrend, we should be looking for the regular head and shoulder pattern, which pushes the market down. In an uptrend, we should look for a trend line break, and then we need the market to come back over the trend line to show us that, hey, we have an inverted. So now we can see right over here, structure. Okay, we had the buyers in the market right around this area. Once we came below this level and closing below the trend line, is that enough confirmation to let us know that we should be looking for what? Sell opportunities. That's enough confirmation to let us know that, hey, we're looking for sell opportunities in this area. Number one, trend line break. Number two, fake out. Well, number one, fake out of the trend line. Number two, change of direction, closing below the structure. Okay. Number three, there's your retest. And then we'll also talk about how to identify and get those sniper entries when we're looking at this area. Okay. So now you're in this trade around the zone, because what happens on a higher time frame, ladies and gentlemen, the same thing happens on the lower time frame. Let me break that down. I don't want to waste a call saying we'll come back and we'll look at this again on another day, but check this out. Okay, let's make this nice and clean right around here so you know your points of interest. Ladies and gentlemen, let me know, what do you think about this call today? Do you think this call was necessary, or do you think it was it's a little too beginner level for your experience? Okay. Do you think this was something that was necessary? The start of our blueprint, identifying the trend before you enter the trades. Okay. You said, can you explain one more time why you chose that first circle? Perfect. Yes, I will. Okay. So the first circle was the market drops. We could have chose this one right here also. Okay. Could have chosen this one. Here's your drop, because I chose this high right here because number one, what was the market doing prior to that high? They made a high, low, higher high, low, high. This was the last high the market made. Okay. Once we knew that this was the last high that the market made, because the market was coming from a uptrend, and now we see it doing what? Drop, pullback, drop, pullback, drop, break the trend. Okay. So I chose this one because it was the highest point of the market. Okay. Makes sense? You talking about this one here? Okay. Perfect. Good stuff. Good stuff. All right. So now what we want to do is I want to you said no, the next one. What, this one or this one? All right, let's put a number on it so you can see it. Let's put a number. Are you talking about number 3? Okay. Number 3 or number 2 or number 1? This would be number 2. All right. That'd be number 2 and this is number 1. Okay. Which one? Number 2. All right. So why did I choose number 2? All right. Anytime the market, remember what we did on the first one? Here's the high. The market drops down. The market pulls back. Did we create a new low? Just like, remember, creating a new high. So look right here. If we created a new low right here, did we create a new low? Here's the low point right here. And did we create a new low? Each point of contact, point of contact number 1 starts to move. Point of contact number 2 must create a new low. Did we create a new low from point of contact number 2? Okay, perfect. So this is the reason why I chose this one right here. So number 1 is the start of the move. Number 2 continues the move, but giving us a break of structure. Okay. We can only continue to move if we break the previous structure, making a lower low. All right. Good stuff. Now let's get back into it. Okay. So now let's talk about the entry point around this area. Let's talk about that entry point around this area. So now, because I don't want to just show you the trend, I also want to show you the entries because once you get off this call, you're going to go back and say, all right, it's time for me to enter the trade now. Okay. So now what we're going to do is we're going to we're going to hide this side from you. I don't want you to see this because I want you to use this ASAP right away. Okay. Perfect. What I love about the Lux Academy, ladies and gentlemen, is you're going to constantly learn. Okay. You're going to be constantly learning here. So now the market just got to this point here, just got to this point right over here. All right. Right in that zone. Now, what I want to notice is this area right here, the market is rejecting off of that level because we're saying to ourselves, I want to sell when the market comes back to this range. After the break of structure, I want to sell when it comes back. But how do I look for sales? Okay. How do I look for sell opportunities? Okay. What am I looking for? The higher time frame, which is my 4-hour time frame, this is the area where I'm saying, okay, the market is here. This is my point of interest. This is the area where my alarm is going off. Now I'm going to ask myself this question. Where is the starting point? For everyone who jumped up on my pop-up Father's Day call yesterday, all right, I had a nice Father's Day call for the women. Where is the starting point that pushed me into this zone? So, starting point, the last sell candle before the market rises up to the level. So this area is going to be my 4-hour zone. Okay. So I'm going to put here 4-hour zone. All right. Got my 4-hour there. There's a reason why I have that. Because to be honest, when we're trading, a lot of us are so focused on the entries that we don't even know how to exit. We are so focused on the entry that we have no idea how to exit the market And by not knowing how to exit the market, it's keeping you in the trade a lot longer than you should be in, if that makes sense. So I got my 4-hour zone right here. Now that I know that, I need to drop down and get as close as possible to this level. So I go down to my 1 hour and I'll back that thing up. Well, back up the chart. Okay. So now here I am. As I drop down to my 1 hour time frame, I need to find the same thing. Okay. And because I already know the position that I'm looking for a sell position. So now here I am. Where's the starting point that pushed me into the zone? So my starting point for my 1 hour is going to be right in this area. Okay. I know this touched it already, but I want to look at this area here. So that's my 1 hour. Okay. So this is going to be my 1 hour zone. Okay. And you're probably saying, okay, all right, you're on the 1 hour. All right, all right, all right. So now I got my 1 hour. Now, again, you don't have to drop down all the way down to the 5 minute if the market is giving you a setup. Okay. So now here we are on a 1 hour time frame. Another thing that we notice is the biggest problem why a lot of people are blowing their accounts is this. All right. I had a conversation with a gentleman the other day. You know that this is your sell zone. You enter the trade right here at your sell zone and you say, I'm getting in right here, right in this sell zone. You entered into this level too early. I don't know why you entered in. Something happened and you decided to enter into the trade too early. So that's what it looks like. The market goes against you. You enter another trade and another trade and another trade as the market is pulling back. You're entering trades. What if you just entered one position and let the market work? Oh man, it's going against me. You've already identified your zone. Why not just let the market work? You didn't say if the market comes up here, I'm going to enter my trade. You said if the market comes here, I'm going to enter my trade in that area. So let it cook. But no, what happens is you enter 1, 2, every pullback, 3, 4, and now you drop down lower. Let's say the 15-minute now. Okay. You already know what your position is. You already know that you're looking for a sell. You believe that this market is going to sell. You believe it. You know it. And as we're looking at this, okay, here's my 1 hour zone. Where's my nearest zone that touched the starting point that touched it? Isn't my 1 hour still around my 15? It's no different. It's the same. It's no different. But notice the market went higher. You want this sniper entry. You want this level. So you drop down to your 5. What we're talking about, some of you are looking at this right now and you're seeing all of the data on the screen. Ladies and gentlemen, if the market was in the zone and you drop down to your 5, you're not going to have that much information on your chart. So don't get nervous. Okay? Don't get nervous. You're only getting nervous right now is because you're seeing all of the candles and you're saying, man, I got to go way back to that far. No, it will be right there by the time you see this chart. Okay, because it's live. I'm showing you data. All of this data over here, you wouldn't have seen that. So don't get confused by that. So now when we look at this, I'm here on a 5-minute time frame. Here on the 5-minute, the starting point is still in the same area. It's not that too far off. Okay. What am I looking for now? All right. I'm not going to drop down to the 1 minute because this is too much. Okay. So what am I looking for? I'm looking for that market to rise. Here's my starting point that pushed up. All buyers. Now I need to see that change of direction. Once I got that change of direction, this could have been my entry to buy in this area. I didn't need to be here. Okay. I didn't need to be in this area over here. I didn't need to be in this area. Once I got that change of direction, this is my entry now. Okay. Now I'm in the trade. But now remember what we spoke about before, ladies and gentlemen? The hardest part about entering into a trade is not knowing when to get out. You notice I got down here my 4 hour, my 1 hour. Of course, you're not going to use this as your exit, but but this 4 hour down here, that's my take profit. Yes, that's my take profit. So now I'm entering into this trade. I'm going short in this area, stop loss above the high, right in the zone. And where's my target? Right there. So now check this out. You're in the trade. I'm in the trade. I'm in the trade. I'm in the trade. Watch what happens when it comes to the 4. Boom. Look at that. Now you are out of the trade. Instead of saying, oh man, I think I'm a swing this one. Why is swinging? The market needs to break the 4 hour zone first. It needs to break that 1 hour zone first. It needs to break that 15-minute zone first. So now look what happened. Boom, right off of that 4 hour zone. You exit the trade. Guess what happened? They broke your 1 hour zone. Now you're re-entering into the trade. If I'm entering here on the 1 hour and that market does what it's supposed to do, my target is at the 4. If it breaks the 4 hour, oh, here's my 4 hour zone right there. Where's my target? What do I have to do to find my target now? Take a look at this. Notice we got a clean break on that 4 hour. A clean break on that 4 hour zone right there. Nice zone in that level. You're not going to stay on your 5 minute. You're not going to stay on your 5 minute. You got to go higher. You got to go higher. That's right. You got to go higher. So now I'm going to go right back to where I started from, which was my 4 hour time frame. Okay. I got to go right back to where I started from, my 4 hour time frame. And what am I looking for on the 4 hour? I know that this was an area right here that first broke structure. So now I got to look over here, 4 hour zone, right here. 4 hour structure, right in that level. Okay. I'm looking for all my zones. I can even go higher to the daily. Now, where's my daily structure? My daily structure is down here. Starting point. Your starting points are your take profits. Find your take profit first before you enter the trade. The hardest part is not entering into the trade, because I can hit buy and sell right now. And what is it going to do? It's going to enter me into the trade, whether I'm right or wrong. Okay. Whether I'm right or wrong, the hardest part, ladies and gentlemen, is exiting. Because if you are in profit, you don't want to get out. Vice versa. If you are in a losing trade, some of us don't want to cut our losses. Am I right or wrong? Okay. And that's one of the problems. So, ladies and gentlemen, when we look at this area right here, did the market come down to our daily structure? Look at the reaction off your daily structure. After it bounced off the daily structure, you see this? We got the break of the trend line. Remember that trend line that we drew earlier? Okay. On a 4 hour. Well, actually, we got a daily break. Look, high, pullback, high, break of structure. Boom, break of the trend. Now that we broke the trend line, here's the starting point right here. Boom. Once we broke the trend line, shift below, retested that last green. Why not let it go? Okay. Listen, ladies and gentlemen, I hope you enjoyed this call today. I am so happy and grateful for all of you. Okay. This was just the beginning. This was episode number 1 of the Lux Academy. And we had to start it off with identifying the trend before you can enter that trade. Let's go. Let's go. Now you can go back and rewatch it. Let's go. Let's go. Lux in it. Woo. That's right. Click that like button. Don't forget to like, share, and subscribe.